Yes, welcome back to another episode on Dennis Bank Trades, and today we are going to look through the forex trading strategy about Asia session, whereby we'll be focusing on London session. So what we are going to do is to first actually understand what these sessions are. So usually we know we have the Asian session. So this is usually a bit of a consolidation sometimes, and then we have London session, and then we usually at some point we do have New York. So the market is usually moving in specific movements around these sessions. So this would be our Asian session, as you can see. Then from here we would actually have our London session. As you can see, some momentum. I'll give it a color green. Yes, as you can see. Then from there we usually have a New York session. I'll give it a color red. So let's talk about these sessions. So this is Asia session. So usually the Asia session is a consolidation. So what usually happens in Asia is that most people that are trading in the world, specifically for the US economy, UK economy, they are in the sleeping hours. We notice that there is a bit of a consolidation. So usually at this time, it's the Asian pairs, the JPYs, the Swiss pairs, the AUD pairs. These are the pairs that are active in this session. So when you actually check the Asia session, you find out that there is no consolidation. But when it comes to pairs such as GBP USD, this is a cross of the UK economy and the US economy. So you'll find out that during Asia session, this is the time whereby people are not working in the US or the UK. That's why when you actually check the major pairs, Euro USD, GBP USD, you find the Asia session. Well, so according to the UK time, the Asia session is usually ranging from 1 to 7 a.m. The London session, it's usually ranging from 8 a.m. and it goes up to 12 p.m. UK time. Then the New York, this is important so that you convert to wherever you're watching from, to your time zone. So this is UK time, and you also have to take note that these actually change during daylight settings. So it's ranging from 1 p.m. to 5 p.m. UK time according to our strategy here, because we are looking at kill zones. We're looking at the zones whereby we will have the most volume. So our strategy today is a London trading strategy. We need you to learn a strategy whereby you'll be able to apply it every single time, and I'm sure it will make you profitable. So usually we have this consolidation of the Asia as we talked about, but we notice that there is a build-up of momentum when it reaches London and New York. So these are the most favorable time to actually trade. So what usually happens is that you'll notice that this consolidation, there is a lot of liquidity sitting in there. So actually whenever we have a sweep of these Asian lows, as you can see, we usually have a reversal. So this London reversal is very important, and we can actually ride along with this. So as you can see, this Asia session, since it's a consolidation, it usually has high liquidity sitting all over it, and you can actually see that after price taking the Asia high, it tended to reverse, and as you can see, after waiting for confirmation, you could actually continue along with the New York reversal. So what usually happens is that there is Asia, it consolidates, we get an Asian sweep, then during London we continue, so we get the London push, then usually we would get the New York reversal of this. So this doesn't always happen textbook, but as long as traders, we understand the game of probabilities and risk to reward, we will be okay. Yeah, so we usually have a sweep here. Then in London we'll have a push. Yeah, I'll name it the push. Then in New York we'll have most probably the reversal, but in this video we'll focus on the London session. So yeah, so basically that's all you would need to know about. Yeah, so basically that's all you would need to know about this strategy. So well, without wasting much time, let's dive into the setup itself. Yes, so what usually happens is that the market is usually transacting around this area. So this is around 8 a.m. London time. So within this strategy, you have to look at the market. So within this strategy, you have to look at the market. You have to take keen notice of what usually happens. Did the market sweep the Asia? Did the Asia session consolidate? Did it trend? Did it trend? You have to look at all those key statistics. Well, for this setup, we are focusing on a trader who wants to be an intraday trader, whereby you come in a trading day, focus, and get out by the end of the business day. Whereas you're someone who is a swing trader, you would actually be better off without this strategy. And also, if you're a swing trader, you can incorporate this strategy with the main trend. So let's take an example for a swing trader. Let's say you know that you are bearish at some point and you have your POI with this. So as a swing trader, you actually know that let's say the daily is bearish or something, and you have your POI. You can actually incorporate this into your trading strategy. You would actually take the buys here after the sweep of the Asia, and it's 8 a.m. That's where most traders are exchanging currency, as you can see the push here. So without further ado, after the price reaching your higher time frame zone, you can actually wait for the shift coordination here, or the change of character, or you can do a trend line break. You know, it's not that complicated. You just have to look at the market in a way that you know that I'm going down, and then you actually trade. So this would be ideal for someone who is a swing trader. Yeah, but for our case, as someone who is going to be a day trader, we would actually focus on the London. We would see how it's actually reacting. What we are learning here about technical analysis is very necessary, but technical analysis alone is not sufficient to get you where you want to go. So in order to become a profitable trader, it's just more than just placing buys and sell. It's actually about the mentality you have as a person. You have to start thinking in probabilities. Most people, when they learn a new strategy, they'll take maybe 2 or 3 losses, and they're like, okay, now this strategy is not working, and they'll hop onto another strategy. What actually burns the time of a trader is not being consistent on one strategy. To refine it, that mentality alone can cost you years. So as a trader, you have to learn to think in probabilities. You have to think in risk to reward. So having that fortitude of a mindset will save you from not being profitable. It will cut the time, because if you keep on refining your edge, if you keep on knowing you're working in probabilities, let's say your strategy has a win rate of 40%, and then you have a risk to reward of 1 to 3, you get. So actually having that mindset alone will put you ahead of the 90%. Let's say you have 6 losing trades in a row. With risk management risking 1%, you'll be confident that in 2 winning trades you'll be back, and the remaining 2 you'll be in profits net. So what separates a winning trader from a losing trader is that ability to take 6 trades in a row, that ability to lose on a plan, on risk management, without changing anything, without being emotional, without revenge trading, without going off the risk management rules. So all that combined with a strategy, any strategy can actually work. So that is a hint, that is a piece of advice I can give to all of you traders out there. And I also made a psychology video about it. You can actually check about it in the channel. So without further ado, let's continue with the trading examples. So in this example, this is an example of what actually happens in the market. So here we are trading gold, since it's one of the best pairs for most profitable traders. So we can actually see here our Asian session, it was actually trending. Yes, as you can see, market was making higher highs, higher lows. But as we actually know that for us, we are waiting for our London session. But so after this market trending, we had to wait, because we know Asia session, the highs and the low, they carry a lot of liquidity. So at this point, you can actually see that the market had to sweep. Here we had to sweep out the Asia highs. So after taking our liquidity, as traders, we would know that we are going to aim for the London reversal. So what did market do? So as you can see here, after knowing that, we can employ our strategies that we've been learning on this channel. So as you can see, this consolidation here, we eventually had a breakout. So we have swept our liquidity, as you can see, and then price is starting to consolidate a bit, then we get a breakout. So what usually happens is that after that breakout candle, we protect our high, because yes, we know that now the market has turned. So here you can actually aim for a 1 to 3, 1 to 2, depending on your risk appetite. You can aim for this as your first TP, and for some people, actually you can aim down to the Asian low, because we know that the market is actually trending down. So so this is a good example. So when you actually come in the market, take note of the market, because in this scenario you can actually see that yes, as the moment you took this Asian high, the market started trending downwards, as you can see, because on days we are known to trade, you will see that the market will just continue pushing higher. So that is a good example from gold. So here you can actually take gold like a pro, as you can see. So welcome back to another example. So in this session, you can actually see that our Asia session moved on pretty well. So what we had to do here is we had to actually mark the Asian high and the Asian low. So we know that large institutions are holding a lot of liquidity in this area. So under here, we just had to wait. So under here, you can actually see we have our liquidity. So take note of where this price was. So before the price actually taking out any of the Asian high or the Asian low, this price was actually ranging. You can see there is no momentum, but after here we had to see a big bullish momentum. So after here taking our Asian highs, you can actually see that the market had a lot of bullish momentum. So with our reversal patterns, we actually couldn't get any reversal move. So that is an added advantage of not selling impulsively. So we have to wait for this bullish momentum to actually die out. So as you can see here, we had some bit of consolidation, as you can see. So we had to wait for the price to actually break out of this consolidation, or some people actually would go in the lower time frames and actually draw a trend line. So here it's just a matter of price action. You can enter using any strategy that you might have in mind. So as long as you know that once we sweep this Asian high, we are aiming for a reversal. So unfortunately this happened in the New York, but some people had to take it. So if you were to aim at the London, so if you were to take this, let's say in New York, you would aim at the Asian lows, as you can pretty see here. So it's not that complicated. It's about patience, resilience, and working in probabilities and risk to reward. Yeah, so we go for another chart example. Well, this was a day that our strategy had to work out. So we went into the day. Remember, as we said, there is literally no volume. We had to mark our Asian lows and we had to mark our Asian high, and we had to mark our Asian lows. So these are big liquidity zones. So usually we can see, as I said, under this strategy, we use price action. We don't use any indicators to help us trade. So actually you can see that the moment we took out our Asian high, look at this market, we had a consolidation below. So this is price action, bro. We just have to trade along. So you can actually see that we have a consolidation. The market is not moving up, not moving down. So we just have to wait for a moment that this price is actually breaking out. So actually here, if you went into lower time frames, let's say the 1 minute, let's say the 5 minute, you would have an entry earlier here. So we will take our shots. Yeah, so let's say we are targeting here. Usually we have to go for a minimum of a 1 to 2. So here we would adjust our stop loss until we have a 1 to 2, and in just one push you would be taking these lows. But see how strong this strategy is. As long as we have taken the Asia high, price kept on dropping. So let's say for some people who are actually swing traders, you know your bias, this would be a good holding position. Well, so for this example, we had our price move up and down. So the Asia session was actually moving up and down, hence creating this double. It had to create these double lows or equal lows, and then check what actually happened. So at exactly market open, we had to sweep the equal lows by a pip. So this strategy is that important. It actually works. So let's say you are a person who trades support and demand. You have taken out this Asian, you've swept out your Asian low. You've actually changed character. You have your demand here. So you would set your limit. Actually, yeah, you would set your limit and it would activate and trade the continuation. So for this strategy, you can use any price action you're seeing, as long as you know the direction. So for our strategy in here, we know that once we see we've taken out the highs, we've taken out the Asian low, we have a bit of consolidation here and we get a breakout. So actually what we would do is we would have to long our position and then be able to actually take out the Asian highs. But as we said, for our strategy we get a minimum of a 1 to 2. So actually if you eventually held your position, you'd be able to hit your nice 1 to 2. Yeah, so this is another example. We swept the Asian lows, and actually here we had more confluence of unequal lows. No sooner had we actually taken out these lows than we had to move up, as you can see. Yeah, so here we came, we swept our Asia low, as you can see. Yep, swept our liquidity, price started moving, as you can see. Let's say here we had our consolidation, we get our breakout, we keep our lows, and for our first tip you would take that, our Asia high, or you would even enter in a lower time frame. But as we said, our minimum is always a 1 to 2, and here we would hit our nice 1 to 2. Yeah, so for someone, yes, for someone who actually wanted to trade a trend line, they would actually also take their setup, because here we have a trend line, retest, break and retest, and here we have a candle pattern. So actually for someone who is actually trading the normal breakout, so with this strategy there is no limitation. So we have the 3 candle patterns, we have the retest, so we would actually also take this as long as we protect the high. So with this strategy there is no limitation. You would actually take your trade up to there. Yeah, so someone with the trend line would enter, someone who's trading a normal breakout as we do also take out. So in this market, you don't have to have a fixed thinking. You have to apply price action. You have to trade what the market presents to you. Yes, so I'm actually showing you that any of all the traders who would have taken this in their own way would actually make money. Yeah, so actually here, as you can see, Asia was pretty bearish. So once we took the lows of the Asian session, price had to actually react a bit. As you can see, price tried to react. We would try, let's say, to enter on this supply zone, or we would actually wait our normal breakout. So yeah, with this breakout candle, we would take it. As you can see, our first TP would be here, or aim for a 1 to 2. So actually what happened here is that we lost. So I had to show you that this strategy is not 100% win rate. Some trades will be losing trades, and it's okay as long as we think in probabilities. Yes, so actually this is our last example. You can actually see that price is coming out in the Asia session. We have our Asia high. We would mark our Asia high, as you can see. So we also had our Asia low. Yeah, so after the Asia low, we would mark out any form of consolidation that we are seeing. So we had to wait for price to consolidate. Then at the closure of this, we would actually mark the low. So when you actually see here, this is the low we had. So we'll take our nice 1 to 2. Yeah, so this is all. And also someone who was trading a trend line breakout would also make money. Yeah, so we would wait for the trend line to come to break out and retest and give us an inside formation. So this would be an early entry for someone trading this. Yeah, protect the lows, and we would also have the same TP. So this one would aim for a 1 to 5. This one will give you a 1 to 2. So depending on anything that you actually use, because this strategy, it's not a limitation. It's not something that's you just have to cram it. So as long as we take the lows, we would use whatever strategy we have. So the consolidation here would work, the break and retest would work, and also someone trading an inverse, someone trading a breakup block would also work, like would also enter. So yeah, we have come to the end of our video. Thank you for watching. You can like, subscribe, share. You can also comment any question that you have, and yeah, we'll respond to it. Let's grow together on this channel. Let's be in this trading journey. Let's make the great run to profitability. See you in the next video.